Welcome back, traders and investors. We have Randall Liss. He's an educator at There's Always an Option. He's a longtime veteran of the options market. Randall, how you doing this morning?
I'm doing just fine, thank you.
Could you give us a little bit of your education and your background in the markets?
Sure. I don't have a lot of formal education. I fell in love with options and more or less dropped out of college to go work on the CBOE. I worked on the CBOE for a little while until I was asked to move to Amsterdam to help found the European Options Exchange. The Dutch Stock Exchange decided to clone the CBOE, the market maker system, everything, even down to English as the trading language. And I was asked, along with a couple other people, to go help start this exchange. I went there on a 2-year contract and stayed 30 years.
Okay, and are you back here now, or are you still overseas?
No, I'm here in Chicago. I'm back in Chicago, actually. What happened is this. I was a market maker on the floor for more than 20 years, member of the board of directors, and the floor closed. Open outcry closed. Unlike Chicago, where it's slowly closing drip by drip, in Amsterdam, like all across Europe, the trading floors closed big bang. We
Wow.
had October expiration and open outcry. The next Monday, it was all screen-based. And for me, hey, screen trading just isn't as much fun as open outcry. So I started to move gradually into the options education business.
Okay, so have you gotten back to screen trading? I know it's a lot different. I traded on the floor too, and so have you made the transition back to screen trading, or are you just sticking on the options education route?
Well, I'm not screen market making. It can't be done anymore for a couple reasons. One of the more overlooked reasons is the minimum tick spread. I mean, when I first started in the business, it was a 16th, so there was $6.25 between every trade. Then it became decimalized, but the minimum tick was still 5 cents, so $5 between every trade. Well, now it's pennies, and unless you're a big giant firm that can scalp 10 million pennies in a day, there's just no money in it.
Market making from a screen is tough. Okay, so you do a lot in the VIX now. Could you just kind of give it just a basic your definition of the VIX?
Well, the VIX is a very important indicator to always keep an eye on, even if you don't trade it. The VIX is the CBOE implied volatility index. It's where the market, in its wisdom of supply and demand, thinks implied volatility in the market as a whole will be over the next 30 days. And right now, it has a 52-week range of 1160 on the low and 2191 on the high. And right now, it's 14 and change, which I consider to be very low. A lot of people speak of the VIX as the fear index because it tends to go up when the market falls and goes down when the market rises. Well, I also call it the complacency index. If people are underinsured, they don't have enough puts, etc., implied volatility is low. And I believe that's what we're seeing now.
Okay, so how do you trade the VIX? Do you trade them through options?
Oh yes. Only options. I'm an options guy. And here's an interesting trade I was just looking at yesterday. The June 1620 vertical call spread can be had for 80 cents. So what does that mean concretely? You're risking 80 cents to make 320. That's a 1-to-4 risk-reward ratio, the sort I like.
And so what are you looking for the market to do with that position on?
Well, volatility could pop at any time. I mean, Russia crosses the Ukraine border, volatility is going to pop. Or a black swan flies. And 20 in the VIX, that's nothing. With last September, it was 2190 with all the government shutdown stuff. And hey, just for a little historical perspective, at the height of the financial panic, 2008, 2009, the VIX hit 80. So 20 is nothing.
Yeah, they keep having to do reverse splits in this thing. I mean, so you're expecting this to continue then?
I think volatility is on the low side. That's my opinion.
Okay.
I'd be a buyer. I'd rather be a buyer than a seller.
Okay. All right, and then your risk is, what you paid for the option, right? 80 cents.
Yep.
And then
The
you
spread can't be worth less than zero, can't be worth more than four. So I'm risking 80 cents to make 320.
Okay, so you're a buyer of premium then. Is that the way you generally approach the VIX?
The VIX, I'm a buyer of vertical spreads. I don't
Okay.
like being net options long or net options short.
Okay.
Some trades I do put on with my own account. I do things that are net options even, but premium short. For instance, I like the iron butterfly or the iron condor.
Could you give us an example of that in an individual, maybe not with the VIX, but in another issue that you're active in?
Sure, just take a look at the SPY, the exchange traded fund that matches the S&P 500. Very liquid, very good product. An iron butterfly, real simple, is you sell the straddle and buy the strangle. So it's a range bound trade. So a good hedge, for instance, in a portfolio is to be long a VIX spread and also short the iron butterfly. So if the premium goes down, your iron butterfly comes in, but if premium explodes, your VIX acts as an offset.
Okay, so are you doing this to hedge a portfolio, or are you just doing this just
Yep,
outright positions to make money?
I'm doing it purely to make money. I'm not a money manager. I'm not an advisor. I'm just trying to look for a simple, steady return, even as a market maker. I don't swing for the fences. I just try to get on base.
Okay, so the people, if they want to start to learn about the VIX and get education, could you tell us a little bit about what you offer?
Sure, I offer personalized options education, theory and working method, and I simplify and demystify. The great secret about options is that it's not that difficult. People make it difficult, but it really isn't. So people who can look at my website, and that is www.thelissreport.com, will see what I offer, and I write on the market and options every business day.
And what kind of a learning curve do people really need to give themselves if they want to get involved in your course and also trading the options?
Well, that's a hard question to answer because it really depends on what knowledge the individual brings in. I mean, I have clients who barely know what a put and a call are, and I have other clients who want me to help tweak their volatility skew strategy. So that's why I offer individually tailored lessons.
Okay, you pay much attention to the charts, the technical analysis of the spider, or not?
Well, you have to. You have to. But I am I'm agnostic on technical analysis.
That's a good term.
I think charts are like footprints. They show where you've been and not where you're going.
Right, and that's similar saying that every ship at the bottom of the sea has a chart room, right?
Well, but once again, you have to pay attention. Everybody can recognize the head and shoulders. Everybody knows what the Fibonacci numbers are. So there is a certain self-fulfilling prophecy aspect to the whole thing.
Okay, and I guess if you're not paying much attention to technical analysis, you could give a hoot what these analysts have to say as far as the fundamental analysis and all that shenanigans that goes on the street.
Oh, absolutely. I look at options. I look at what the options tell me, and I like to do strategies that have a solid risk-reward ratio.
Okay, and while you explained the trade that you had on there and the risk reward ratio there, so all right, well we've put your website there in the chat room, the list report. If people want to learn more about the VIX and trading VIX with options, here's an option for you. So hey Randall, thanks a lot for taking the time out to come on the show, and we'll keep an eye on your strategies and certainly like to have you on again.
Well, thank you for having me. I appreciate it.
Okay.